So now we'll move on to part 3. What are lenders looking for? I think we've done a pretty good case of showing that most farm enterprises, not all of them, but most farm enterprises are going to need some amount of financing or credit in order to function. Whether that's an operating line of credit that's over a period of that turns around within one growing season, or whether it's more long-term financing for equipment or real estate. So part 3 is what are lenders looking for? And this is true perhaps to a lesser extent, but it's true as well for a lessor, because a lessor, although their exposure is not as great to you because they still retain ownership of the land, they're going to want to make sure that you can actually pay your lease. So a lessor will sometimes want some of this information as well. So both leasing and purchasing land require a financial commitment. A landlord, as I said, will want to make sure you can make your lease payments on time. A lender will want to make sure you can repay your loan. Both may require documentation to prove your credit worthiness. So lenders will want to see financial documents. When approaching a lender, be ready. And that doesn't mean that you have to have everything completely accurate and completely filled out and that sort of thing. Most lenders, if they're used to dealing with farmers, are going to be relatively forgiving in terms of the exact nature of your financial documents, but it's important to have records. Really poor records are kind of a lender turnoff. We call it shoebox accounting. We sometimes will get people coming in with a shoebox of receipts and try to put an income statement together based on that. And that's not always the best way to do things. It's keeping good records is just as important in agriculture as keeping good production records or anything like that. Keeping your financial records up to date are very important. So whether borrowing or land or borrowing for your farm or ranch business, you want to know your financial position, and that's where the balance sheet comes in. Knowing what you own, what you owe, what your net worth balance is. Know how much loan you can repay, and this is where the cash flow budget comes in. Know what your cash flow surplus or deficit is going to be by month, or at least what you think it will be. Of course, it's never going to be 100% accurate, but try to come up with some reasonable projections of what you think you can afford for monthly payments. And try to have your documents in order as best you can. Try to have at least a basic balance sheet and some basic cash flow projections are pretty important to anyone that's going to extend your credit. So eventually you'll need a business plan. And this is not, when I say business plan, sometimes people get a little bit intimidated. A business plan doesn't have to be a 100-page binder. It doesn't have to be really complex. It can be as simple as basically a cash flow budget and some narrative as far as how your business is going to make some money, how your business is going to be able to pay its bills. So a business plan is ideally a roadmap to success. It's critical for long-range planning as well as for getting financing. And it should be ideally general enough to be flexible but provide some clear direction. And business plans they're often done at the request of a lender, and a farmer does it to get the loan. But ideally the business plan should be more than that. It should be a document that guides the direction of your business and is used in the management of your business. So a business plan describes who you are, who are the principals in your business, who are the founders or owners, who is your advisory team if you have one, what are their qualifications or experience, who are your customers or who are your customers going to be, who will buy your products, what you plan to produce, how you plan to produce it, how you will market your product, and ultimately how your business is going to make money. And as I said before, many people go into agriculture because they have a great deal of importance to non-financial goals. They want to farm in a certain way, or they want to improve the environment, or they want to enjoy a certain lifestyle. And all those non-financial goals are fine, and they can be very important to your enterprise. But it's important that your farm business makes at least some amount of money if you want it to be sustainable over a period of time. So the profits don't have to be your only goal or even your primary one, but it's important that they're there because they're a prerequisite to achieving those other lifestyle or non-financial goals. So to approach a lessor, you want to be prepared to demonstrate that you will be a reliable tenant. A lessor may want references, they may want a credit report, a cash budget that shows that you think you can make your payments over time. They may want a legal contract. In agriculture, oftentimes these things are done on handshakes. Legal contracts are really probably a best practice because they protect both parties. Handshakes are great until something goes wrong, and then sometimes the handshake doesn't carry as much weight as it once did, perhaps. A legal contract is often a good practice to go by if you can do it. A lessor may also want to know if you're leasing land, how your production practices, how you're going to grow products. Are you going to do anything? Are you going to make any permanent changes to the land? Are you going to plant perennial crops? Are you going to produce in a certain way? They may want to know that you're going to be a good steward of their property. Approaching a lender. A lender is a little bit of a greater commitment because with a lessor, the lessee retains ownership of the real estate and could end the relationship with either an exit clause or at the termination of the lease. Whereas a lender, you're going to be buying the property and they're going to be extending financing to you, and they want to make sure that you can pay it back. So most lenders will want to see tax returns. Typically, they'll want at least 3 years of tax returns for your personal taxes. They'll often want references, how you've done business in the past. A credit report, you don't necessarily need to bring that with you. The lender will be able to pull that up themselves. But it's a good idea to know what's on your credit report ahead of time so that any deficiencies you can explain. If you go in to borrow money and then there's a lot of surprises that come up in your credit report, that's not really a good thing. It's good if you can explain those things ahead of time. It's good to have a cash budget that shows that you can make your loan payments, or if you're going to have a deficiency, how that's going to be addressed. And a basic business plan is also a good thing to have. It's not necessarily a requirement of all lenders, but it's not a bad thing to have because it helps you demonstrate to the lender that you're serious about what you want to do, that you've put some thought into your enterprise, and that you have a plan to actually remain financially solvent and make money in this business.